I was just tripping out because, I had set my areas of interest for Asia and London sessions. And, so I'm like, all right, I'm gonna wait for, price action to come into my area, and then I'm gonna look for, whether they be buys or sales. And then y'all start posting all these posts and shit. I'm like, wait a minute, wait, what was going on? Like, what happened? And so I'm sitting there looking, I'm like, oh man, did I miss it? And so when I went and looked at the charts, I I didn't quite understand how everyone felt comfortable with taking such early buys, I guess. And because to me, like price didn't come into the areas that I was looking for. So I was just like, all right, I'm just gonna hold on and see what happens. Later in the session, I was able to get a few buy scalps and sell scalps in, but that initial opening orders that I saw a lot of people get, I didn't quite understand why that was.
All right, cool. Um, as always, honesty is the best policy. So, being honest with yourself about not understanding. And I heard Kev say something like, if you're confused about PA and you don't know what's going on, it really does take a mature individual to take a step back and not try to force trades. Remember, there need to be like these little tiny triggers in your head where if you start to get these certain feelings, those should be automatic red flags to not take trades. If you're uncertain, you don't know where you're at in the current higher time frame structure, you feel FOMO, don't be trading if you got FOMO. If you feel like you're about to miss out on something, it's not a reason to just execute a trade. It's all these things. So it's good, Eric, that you're able to admit that. So what I did for you, bro, since you asked that question, is I went ahead and I created a PDF for everybody. So I told you guys I do one or two of these per week. So this is the second one that I created for you guys this week. And I break down in detail all the PA and what we had to analyze prior to the session open, and then the first move of the session. So I'll drop this in the chat afterwards. We're going to go over it right now on Zoom, but so that way everybody has a good detailistic perspective of the first hour of New York sessions price action today. I'll drop it in the chat for you guys to read after. All right. So let's first start with, of course, the fundamental backdrop this rising, and then we'll get into the three trades that I placed today on MNQ, which were three buy positions. I took two buys at the beginning of the session, waited for this nasty ass pullback that came and liquidated internal liquidity and tapped into the London session lows. And then now we're probably about to take out the Asia session highs up above the 29,930 to the 29,980. I wouldn't be surprised if that's where the session ends today, liquidating all of the sellers that exist above Asia session highs from, I don't know what it was, maybe two or three sessions ago. All right. So let's break that down from start to finish. So first, starting off with the fundamental backdrop, I always try to give you guys just kind of a brief overview of what I'm seeing in the market. Recently, I've been doing my workouts in the mornings, so I usually don't come, especially if we have 7:30 a.m. data, which most of the time we do, especially labor market data for like unemployment claims, and some PMI figures tend to come out at 7:30 in the morning. So I really don't get to my charts and pull up Financial Juice and Bloomberg and Reuters and ING and Bank of America and all the reports that I read prior to the session until like 7:58 a.m. Um, Anyways, when I did that this rising, this is the analysis that I sent you guys at 8:09 a.m. All right. And again, I hope that nobody sees these as I told you so. I really am just trying to show you guys that you have a mentor that reads the markets and analyzes it for you guys and gives you guys kind of like a basis to go off of so that way we as a community are freaking winning. I don't want anybody trading in the wrong direction or just assuming things. So I try to give you guys my bias, show you all how every single day it aligns with the market in real time. So at the time of writing, both crypto and Nasdaq have stabilized following yesterday's sell-off. Both a stronger recovery is unlikely today in crypto. Excuse me. However, a stronger recovery is unlikely today in crypto. The latest labor market data continues to point towards a resilient U.S. economy, reinforcing the idea that the Federal Reserve has little urgency to begin easing monetary policy. As long as economic data remains firm, Expectations for higher rates stay in place will continue to limit aggressive risk taking in crypto assets. Geopolitical tensions in the Middle East also remain a key risk. However, as we discussed yesterday, markets largely shook off the initial fear of escalation after it became clear that diplomatic negotiations are still ongoing. You guys remember I mentioned that acronym yesterday, TACO, Trump always chickens out. And that's most likely what was going to happen considering the overnight events that took place during yesterday's Asia and London, or 2 days ago, Asia and London session sell off, right? So I said, for now, investors appear to be treating President Trump's recent remarks as political rhetoric rather than an immediate signal of broader military conflict. From a technical perspective, Nasdaq continues to trade above our 29450 shadow dark pool. As long as price holds above this level and trades above Asia session lows, I expect bullish momentum to remain intact, allowing price to continue to push into higher premium levels before sellers attempt another defense. Heading into today's session, our primary focus remains on headlines surrounding the US and Iran. Any confirmation that negotiations have broken down or that military conflict is escalating would likely boost oil prices, increase demand for safe haven assets, and weigh on overall risk appetite across both equities and crypto. For now, the market appears to assign a higher probability of diplomacy prevailing over conflict. Unless that narrative changes, the intraday bias remains bullish. A decisive break below the Asia session lows, followed by a bearish close beneath that level, will be the first indication that sellers are beginning to regain control and that downside momentum may be returning. All right. So that's what I was seeing this rising prior to the New York session. So coming into the New York session and picking apart PA. All right. We're going to start on the higher time frame and just clear up any confusion that took place at the beginning of the session. So first, here is the New York session opening candlestick, which is at 8:30 a.m. It's this massive bullish candle, the wick to the downside to respect the dark pool, the 29674. So this is all that we had to analyze in terms of price action prior to the New York session, all right? All this PA. So on the 15-minute, what can we see? Just to give ourselves a clear intraday bias until the opposite unfolds. So number one, we can see that coming into this New York session open, we are trading above Asia session lows. We are trading above London session lows. So there's two confluences right there. Remember that, for the daily candlestick, it opens at the beginning of Asia session, which is somewhere here in this area, right? And heading into a new day's worth of price action, if we're trading above a daily low, then the path of least resistance is skewed to the upside or in favor of the buyers until price comes into a premium where sellers can play defense or until those lows are broken. So that was one indication that buyers are in control today as to why I gave you guys that overall intraday bullish analysis this rising. Second is that, of course, on the 15-minute time frame, we can see that price is trading above not only all of the EMAs, but primarily the 50 EMA, which is acting as a support coming into the New York session open. So there's another clue to say to ourselves, as long as price is using the EMAs as support and trading above it, then we should be looking for buying opportunities. Even if price pulls back into a discount, we should still be looking for buys because the higher time frame is showing us that buyers right now are in control of the market. The third thing, outside of the market lows, Asia and London, price trading above the EMAs, is that also we were trading above two most recently updated dark pools. So coming into this New York session, you can see this is right around where price action was prior to the session open. And we had created a new bullish leg right above dark pools. So London session lows broke previous bearish structure highs and created a new bullish range to trade from A to B, right? Trading above two dark pools at the 29674 and the 29769, which were the most recently updated dark pools that Scalper has given, right? So all of these things taken into consideration showed me today that the path of least resistance until sellers regain control would be buys. So now that we know on the 15-minute time frame coming into the New York session that buyers were in control, we can say to ourselves, so that way we're not trading against the trend based off of emotions, what would we have needed to see today in order to take sells? Can somebody give me one thing? What's one of the first things we would have needed to see if we were going to sell during New York session today?
London session lows taken out.
At least at a medium, right? London session lows taken out or a new bearish leg. So this is where price action was right at the session open. We would have needed to see a high liquidated and a new bearish leg made, right? Compared to the previous bullish leg. So that's number one. Good job, Eric. Somebody give me another one.
Cross on the
Hey,
EMAs.
Right? Price sellers taking price beneath the 50 EMA, which would have also coexisted with the break of London session lows. So good job. I don't know who said that, but pat yourself on the back. That's another good thing. Okay. Somebody give me a third thing that we would have needed to see.
A break into
Risk,
structures.
Say it again. Heard two people.
Break into structure.
Okay, a break of two previous bullish structures. That would have been nice. A little bit extensive because we're scalpers, but still nonetheless something that we could have taken into consideration. Not really what I'm looking for, but good job. Give me one more.
risk off for fundamentals.
Okay, fundamentals, risk off fundamentals. Good job, Codius. We'll add that on the list. I actually wasn't thinking about that, but that is a good one. Risk off fundamentals. Somebody give me
Fail
one
to
more in
break a
terms of
high.
Reaction to
sorry,
the dog
Tez.
pools.
Tez, what did you say?
A fail to break a high.
Okay, a failure to break into new structure high. Good. And then Camille said it, said what I was looking for. What did you
Dog
say,
pool.
Camille?
Rejection of the dog pool.
Right, good job. Bearish rejections of the dark pool and bearish closes beneath the dark pools, right? Price action below the dark pool, starting to print bearish order flow or sell delta hells. So because we came into the market and we analyzed that buyers in control, make sure that you guys are also setting yourself up for success by giving yourself if-then scenarios. If right now I'm bullish, before I sell, I want to see these things play out. So that way, in the moment, when the market opens during New York session and as you're going through the session, you're not conflicting yourself with the emotional biases and the sporadic movements that you'll see during New York session at the open when volatility picks up. Because what you'll do is you'll start to second guess your bias. But if you have if then scenarios where I'm only going to be bullish as long as or until this happens, then you can set your emotions aside and you can pay attention to what the market's telling you and not what your emotions are telling you. All right. So good job. Great list of things that we just built together as a team. All right. So Eric, following along with that 15-minute time frame, we're now jumping down to the lower time frame, and just keep in mind how these areas of interest, these gray zones, correlate once we jump down to the minute charts. All right. So we're
all
going
right,
to
I
go
got a quick
ahead.
question.
Yeah, go ahead.
So you dropping down right now, now what would be the reason for you dropping down? Was it all of the things that we just went over, like not happening? Because to me, I'm not dropping down until price comes into a area of interest, which I initially had London session where you have London session lows at. That was my first area of interest, and price didn't quite come down to that area before it reversed.
Yeah, beautiful question. So the reason right now while I'm dropping down to the 1 minute chart is to go over the most recent bullish price action from the 15-minute leg. So just remember this is the London session low, and this is the new high on the 15-minute chart that we made, or the A to B move on the 15-minute prior to the session open. And the reason why I'm dropping down to the 1 minute chart is to see if there are any structure formations that we can trade from in this 1 minute price action in this new bullish leg on the 1 minute chart. Because remember, price action doesn't always have to come down and respect a 15-minute base. Even though today it eventually did, we have to remember that if there are continuation moves in between an A to B move, for example, continuation delta held formations, right, that break previous bearish structures. So there was a lot of buying activity here on the 1 minute chart. We can see that, and I'll show you guys that in just 1 second, which is the reason why I was taking buys from this base at the beginning of the New York session, right? So does that answer your question, Eric, while we're now on the 1 minute time frame?
Yeah, it does. And honestly, what it also tells me is you really shouldn't have any biases at all in this market, because that's a bias, in my opinion, anticipating price to come down into areas of interest almost like it's a given, and it's actually not.
It's not. No. What we're doing is we're attempting to react from the most likely areas where buyers and sellers are likely to play defense at, trapping the other buyer or seller and reversing price. So what I'm
Okay.
trying to get you to see is, right, so to answer your question more directly, this is the, hold on a second. Somebody's crying. Give me 2 seconds. Okay, so they're not crying. They're running around the house playing dinosaur right now, freaking chasing each other, acting like Tyrannosaurus Rexes. Okay. All right, so what I'm trying to get you to see, Eric, is that this was the 15-minute structure leg coming into the New York session, right? We made this new A to B move or this new bullish move. But there is no real bearish price action in it or no down candles before up moves. So dropping down to the lower time frame, we're going to be able to see good clean structure where we broke above this previous dark pool, turned it into a support after it acted as a resistance, and then continued into the next dark pool. So dropping down now to the, just keeping in mind that we're operating in this bullish move on the 15-minute, so we can look from structures to trade from, because remember, it's not given that price is going to come all the way back down into this 15-minute base. Of course, we would like for that to happen, and today we got that, right? However, it's not guaranteed right away at the beginning of the session. And so we need other areas of interest to trade from. So for me, what I like to do is, of course, right at the beginning of the session, London lows were made and we created a buy delta held formation. So here you can see lows were liquidated. We then see bearish structures taken out with new bullish structure. And then higher lows came in, retesting that base and continuing with the overall bullish momentum. This is the first delta held that we see at London session lows. So coming into the New York session today, if we were going to be sellers, we would have needed to see bearish price action beneath the last area where a buy delta held was formed, showing us that sellers have now regained control of where buyers were trapping sellers and becoming aggressive enough to make new bullish structure. All right. So that was my first key area of interest on the lower time frame where I could be a buyer from. The second key area of interest where I could be a buyer from is zooming out a little bit, where we had the last down move that led to the break of the last bearish price action. So measuring the last bearish price action over to the left-hand side and extending that over, we can see that the last delta held or continuation pattern was right here. We can see internal lows liquidated. Here's an internal low. This wick liquidates that internal low, respects the dark pool at the 29,674. We then break previous bullish market structure, or excuse me, bearish market structure, creating the now new 1, the 2, and then price pulls back to create the 3, respects the dark pool, and this is the last delta held continuation formation that breaks or leads to a new bullish structure from the 3 to now the new high that takes out the previous bearish structure. So that for me today became my first AOI where I want to take buys from, because this was the last area where buyers were trapping sellers at the dark pool, creating new structure formations. Sellers were testing the strength of those buyers after defending their previous positions over to the right, left-hand side. And then buyers were again trapping those sellers and becoming aggressive enough to make new structure formations. So this was my second area of interest where I wanted to be a buyer from. And this was my first area of interest where I wanted to be a buyer from, right? So you kind of see how I'm gathering my AOIs. So all I simply did today was I highlighted this 3, extended that over to the right-hand side, or this last down move that led to this bullish move. And then same thing here. I highlighted this last down move that led to this bullish move that broke this previous bearish structure. And these became my 2 AOIs to trade from today during New York session, right? So now coming into the session open, the reason why I took these trades, you can see the first base at the New York session open. Mind you, again, here's the 8:30 a.m. candlestick open. And what do we see prior to the New York session open? Look at all of this nasty consolidation, right? All of this just sideways price action. So think about it. What me and Scalper teach you guys is that if you don't see a reaction from a continuation base or from a dark pool, just leave price action alone, right? There's no point in trying and making some formal attempt to trade it. Let me see. Where's my, let's do 30-second. Nope. All right, so here was the consolidation before the session. So I'm instantly sitting there saying to myself, we're trading above this dark pool at the 29,674. We're still trading above this last higher low that led to the new break in structure. And so if price, when it comes down into this area, can absorb sell volume, then I'm going to start to facilitate buy stops, right? And so after price on the 1 minute chart came down into this AOI, I then dropped down to the seconds chart. So we'll now go down to the 15 seconds chart. All right, so the 15 seconds chart, we can start to see the formation of a delta held inside of a base. So here we see price come down into the base. Instantly following price coming down into the bottom of the base, we see a low. And then we see a higher low. Now you can't really see this on the 15 second, but going down now to the 5 second, we're starting to see the buy confluences play out. Now remember, you want to see these confluences play out at bases, not just at random areas of interest on the charts. The only reason why I executed this trade is because we see the buy confluences at a base. So here we see a low liquidated. Instantly following that, this last resistance was unable to hold price. So if sellers were still in control when we came back up and retested this sell wall, we would have made a new structure low and price would have continued to melt. However, it did not, and it created the opposite. We create a higher low, higher high formation for the first time inside of a base. So here's the low, liquidated, higher low, higher high formation. But for me, that was still not enough confluence because remember, we want to see in a buy base at least two previous bearish structures broken that also break the 50 EMA. We didn't get that until another higher low, higher high was created. And so this became my most immediate bullish range to trade from. So we can see we have now broken two previous bearish structures. We have also broken above the 50 EMA, and we have now created a new range from A to B, while we are inside of a previous area where buyers created a delta held continuation, and we are trading above a dark pool at the 29,674. Right? So the 29,674 is right here. You can see how sellers were absorbed at that dark pool, and then buyers started to trap sellers, became aggressive, and broke the 50 EMA along with two previous bearish structures. So as soon as I saw that in this pullback here, I simply just trailed it with a resting buy stop. My buy stop was sitting right above this high. The next bullish candlestick executed that buy stop. As soon as it was executed, my stop loss was nice and tight beneath the low. And that was all she wrote for this first initial position. And I took this position all the way up until I saw this failure swing high here when price started consolidating, where I closed this first position. I initially was targeting where price action is currently trading at now, which is this Asia session area of interest where sellers were trapping buyers over to the left-hand side. But in this first initial bullish push, we did not make it there. Right? So in the document that I created for you guys, this rising, I break this down in detail to show you guys how I was able to identify these areas of interest, taking screenshots of all the PA prior to the session open. All right. So to answer your question, Eric, what was I seeing at the beginning of the session that led me to take this first initial position? That was it. Right. So hopefully that kind of clears the air on that. Right.
Yeah, it does.
Okay, cool. So now let's go into the second position. The second position was simply just paying attention to continuation formations. So same thing that I did, paying attention to how I identified the London session areas of interest. You can see where I took profit at was this failure swing high, but we have to remember that we just created new bullish structure. So here we can see internal lows. Here are two previous internal lows compared to the last higher low, higher high formation. So we're still operating in this bullish structure. We liquidated internal liquidity, and we started to create a delta held continuation where we see lows liquidated, higher lows, and new highs made. So this would be our one or our new one. Where price started to stall out and pull back would be our two. This is the new area of interest where we don't want to see at least this base, but more predominantly this base, broken. And if we can see buyers hold price at this new base, where we have now created new bullish structure or a new swing high, then we're going to continue to play off of that momentum. And so sure enough, I simply waited for price action to tell me that buyers were absorbing sellers upon the retest of this base. So you can see that here. We see a low liquidated. Instantly following that low liquidated, we see price make a new structure high. Upon the pullback and the retest of this new bullish structure, I simply put a resting buy stop right above this high. That buy stop was executed here. It aligned with the moving average crossover. Stop loss I took nice and tight originally beneath this low. After price broke this structure high, I moved my stops up into my entry. And this trade I took out right at the 29,930, where if we go into the Discord, I said to you guys this rising, in real time, I'm hoping that you guys paid attention to this because we literally called the top out of this move. Freaking clutch. I said it right here. I said, I'm looking to see how sellers react to the 29,930 and the 29,980, which was previous Asia session highs. If buyers can break this, it will go back to the dark pool at the 39.9. However, we could see sellers defend these highs, so I'm watching carefully. This was at 8:56 a.m. You can see 8:56 a.m. was right here when price came up into the 9,930. So as soon as we see the sell delta held formation here, I closed this position. So here we see a high taken. Instantly following that high taken, we tapped into the 29.30 and we see lows broken that also break the 50 EMA. We retest that sell wall and then we create new bearish structure. So that for me was a reason to close this position that sellers were clearly defending from the previous Asia session highs where they had trapped buyers over to the left-hand side. I think this was like 2 or 3 days ago, maybe worth the price action. Shit, we're on the 5-second chart. Hold on. Let me go back. Yeah, see here in this area. So you can see this was Asia sessions high where we are taking highs, making new bearish structure ranges from A to B, breaking the 50 EMA, retesting that sell wall, and then making new bearish structure. So for me, that was the 9,980 and the 9,930. So I highlighted that area of interest and I extended that over to the right-hand side. That became my sell wall for where I wanted to take profit from my buy positions today, right? So after, geez, this looks like freaking children's drawings. Let me get rid of all this stuff. All right, so after we had the sell-off, I was sitting there saying to myself, these market makers are so smart. New York session manipulated buyers to try to break the sellers from Asia session. Sellers clearly played their defense, but buyers are likely going to have another opportunity to play defense from where? Remember, the 15-minute structure that we had identified from pre-New York session was all the way down here. So London session lows were still in play. And that number 3, or the buy base from the London session lows, or the 3 that took price higher, was still in play. So literally on this trade here, why I caught the exact bottom of this move, I just entered on the 1 down, 1 up candle. So as soon as price came down into the base, you can see this is the first 1 down, 1 up candle. As soon as this candle closed, I facilitated a market execution, took that trade there, stop loss nice and tight beneath the low. What gave me confirmation that this was a good trade to hold was after we see another down up formation that breaks previous bearish structure and starts to hold bullish order flow above the dark pool. So we can see another retest of that base that leads to new bullish structure. And then that gave me confirmation to hold this trade. That's then when I said to you guys in the community, if we can break the 29,800, which was this last trapped buyer, that we're going to see this thing go back to New York session highs. And so when I started the Zoom call a couple minutes ago, we were in this little tiny consolidation. I don't want to be sitting here on the trade with you guys, so I just closed it out in this consolidation, took my position off the table, just in case we came up into this premium and sellers decided to defend, right? So nonetheless, those are the 3 buy positions today. I was overall bullish. If anybody was able to take these sell scalps and capitalize on this pullback, great job. But remember to align your trades with the higher time frame.